What special challenges does this year-end present to the stock market right now? This has been an especially difficult year for most investors, and I'm guessing your account is down just like everyone else's is. There are at least two issues that are affecting the year-end stock market, and what are they? Well, first of all, you have tax loss selling. If you have a taxable account, it might make sense to harvest some of those tax losses so you can lower your tax burden for this year. And guess what? Many investors are doing just that right now. And what does that do? It causes selling pressure on the market. The second issue affecting the stock markets is the Consumer Price Index announcement that's coming out this next Tuesday on December 13th. How the stock market reacts to this announcement could give some indication of how things might turn out for the rest of the year, going into next year. So why am I bringing up these two issues? Well, as I get into my review of the health of the current stock market, you're going to see that they're starting to look pretty unhealthy again. But it's important to look at what might be causing this unhealthy stock market to keep things in perspective. Is this unhealthiness going to last, or is it going to turn around and get better? Look, tax loss selling always has impact at the end of the year for the stock market, but this year's especially difficult because the entire year we've been down. Most people's portfolios are down, and so they're going to want to take advantage and sell those losses, harvest them, so they can write them off against any potential gains that they might have, either this year or potentially going forward. If we look at how the stock market performed last week over the previous 5 days, you can see that this is a very unhealthy stock market. The best performing index was the Dow Jones Industrial Average in yellow, followed by the S&P and NASDAQ, followed by small caps, followed by Ark Invest. So this is not really a good-looking stock market. You ideally want to see exactly the reverse of this. And in fact, let's take a look at the previous week, the week ending December 2nd, and you can see we had actually a healthy stock market here. Ark Invest leading the way, NASDAQ and small caps next, S&P, and then finally the Dow. So this doesn't look good so far. And if we look back over the past month, you can see things also don't look very good. Ark is at the bottom of the heap, followed by small caps, and then followed by all the rest of them. So this is not a very healthy looking stock market. And what about if we look back over the previous 6 months? Well, you can see the market's bottomed out right here, and we've been coming out of the bottom with the Dow Jones Industrial Average leading. This is not a good way to come out of a bottom. You want the higher risk stocks to come out faster and much quicker than the safe stocks like the Dow Jones Industrial Average. We have exactly the opposite here. What about the bottom analysis? Now, we've been doing this for many weeks here, and if you'll remember from my previous videos, we had two bottom forming indicators back in September. They're off the chart here, actually. And then that was followed by a very strong bottom confirmation here, where the bottom confirmation signal was at 100% and the confidence level was very high in the mid to high 90s. So this was a very good indicator here. We had another attempt here, but the confidence level never got there. We had another attempt here, but the confidence level almost made it, but they weren't quite in line here. I'd like to see them both be high at the same time. And then things really started to falter. In fact, last week, after I made my video, I realized this falling confidence level with a high confirmation level is kind of an indication that things are starting to fall apart, and that's exactly what they've done so far. Let's take a look at the stock rankings. This also gives you another picture into what the health or lack of health of the market is. And in fact, I'm always going to refer back to August 17th, because on August 17th, we had a healthy stock market, but we had an unhealthy treasury market. You can see longer duration treasuries are ranked 9 and 10, but the stock market looks very healthy. The higher risk equities like small caps and NASDAQ 100 were ranked number 2, with the Dow ranked down here at number 4. That's really what you want to see. Now, by September 30th, we had an unhealthy stock market and an unhealthy treasury market. And then last Friday, on December 2nd, We had a healthy treasury market. This is great. Longer-term treasuries ranked 1 and 2, and the NASDAQ and SPY were starting to move up here. So my hope was that the equities would continue to move higher and displace the treasuries so that the treasuries were below them, and then we would have had a healthy stock market and a healthy treasury market. Well, I didn't get my wish. So if we look at this last Friday, we have a very healthy safety market here. Treasuries and gold ranked near the top, and long-term treasuries ranked right at the top. But the stocks look horrible. I mean, Dow is the best ranked stock down here at the bottom, and then the NASDAQ and small caps are right here at very dead last. This is not a healthy picture. Let's take a look at the buying and selling pressure, because this gives us some indication of what's going on under the covers, if you will. So if we look at the Dow Jones Industrial Average, you can see that the selling pressure has been shooting up here, and in fact, the price has been falling. For the S&P, you can see that the selling pressure has been shooting up even more, and you can see that in the performance, right? The S&P was performing less well than the Dow Jones Industrial Average. So much bigger increase in selling pressure here. This isn't a good look. What about the NASDAQ 100? Well, you can see that the selling pressure is shooting up here, but it's not as high as the selling pressure on the S&P 500. I'm hoping this is an indication of better things to come for the NASDAQ. And what about small caps, which, by the way, led us out of the bottom initially? And you can see that the selling pressure, yes, it's moved up, but it's even lower than for the NASDAQ 100, which maybe means that things are going to turn around here. And then finally, Ark Innovation. Well, another thing that I like about this is, yes, the selling pressure is moving up here, but it's lower than the selling pressure for the S&P 500. So again, I hope this is an indication that maybe buyers are going to step in, and the buying pressure, which is this gray line, will start to rise here and go above the selling pressure. We just have to wait and see what happens. And what about sector rankings? Well, you've heard me for several weeks say I don't like the fact that cash is in this bucket at all. I don't want to see it in this best ranked sectors chart at all. And you can see actually it's moved up. It was back here, sort of in the middle of the pack. Now it's ranked number 3 behind energy and healthcare. Gold is number 4. And then you can see treasuries are all in the top ranked sectors here. So this is not a good look for equities. And then if we look at the worst ranked sectors, you can see, just as in previous weeks, Bitcoin and innovation, ARK, are ranked right at the bottom, with clean energy ranked near the bottom as well. The NASDAQ 100 is sort of in the middle of this pack. Small caps are here. The semiconductor sector has actually done fairly well lately and has been moving up. Let's take a look at how treasuries look. Well, you can see with 3 to 7 year intermediate treasuries, the buying pressure has been well above the selling pressure here, although it's starting to fall more recently. If we go out to what I call intermediate to long treasuries, 7 to 10 year treasuries, you can see we had a huge spike in buying pressure back here, which has fallen off dramatically recently. This could be in anticipation of the CPI number coming out on Tuesday. And if it comes out hot, the Fed may threaten to raise rates more than the 0.5% they said they would. And what about long bonds, 20-year treasuries? Well, you can see that for a long time here, the buying pressure has been well above the selling pressure, but recently it has fallen dramatically. And what about gold? Well, you can see gold has been trying to rally here, but it's been kind of, I'd call it lackadaisical. And you can see that the buying pressure was above the selling pressure, then they swap places. Now the buying pressure again is above the selling pressure, but it's declining even as the price is going up. This doesn't look really convincing to me. And what about Bitcoin and cryptos in general? Ever since the FTX news came out, the crypto market has just been awful. You can see how it fell off here. It's been meandering lower and lower here until this gets resolved and people feel more confident the bad actors are out of the system. It might be a while before we see this really start to rally. And you can see that the selling pressure was well above the buying pressure here. We got a little bit of buying activity here, but now the selling pressure is not only above the buying pressure, it's continuing to increase. This really doesn't look good. So what are we supposed to make of all these bad signals right here after a very healthy stock market last week? Well, I'm not going to try and read too much into this, given that there's a lot of tax loss selling going on right now, and we've got a CPI number coming out on Tuesday. Let's wait till next week. Let's see how the markets respond. Let's see how the CPI comes out, and then how the markets respond to that, and how the markets respond to anything the Fed might say. We might have a much better picture by this time next week. I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.